Hi, I'm Julian.
Hi, I'm Alice, and we're from Investor Crowd. Our mission at Investor Crowd is to provide real estate opportunities.
And this is our weekly wrap-up of all things crowdfunding. We talk about companies, deals, and regulations with a global perspective and a big focus on Asia. This week, we're going to do a bit of a global news wrap-up in relation to our key markets and what that really means for real estate investors, and follow it up with sort of the predictions on what that means and where we're going to invest our own capital. So some massive issues this year around the world. We saw Brexit. Since the last couple of months, we've seen the pound drop significantly. A lot of interesting news articles about real estate prices flying around the internet. What we see in our office is certainly a softening of the market, some lowering of some prices, but you've also got to look at the actual real estate itself. Hotels with a lower pound are experiencing a boom in occupancy, and with a lower pound, you're also seeing a lower cost to purchase from foreign investors. So that market seems to be going up. Student housing, as another example, not really affected by too much by what everyone thinks is going to happen to London. So that's sort of some key issues there. Then we had Donald Trump winning the US election. No one outside of America thought that was possible. Proven wrong. Everybody on the planet. It seems from what are the reports coming out from private banks and real estate markets that the US dollar looks like it might strengthen next year. Related to Trump's comments, whether he follows through with trade statements or other policies that he's mentioned in the campaign. The real issue, I think, for real estate investors isn't Donald Trump. It's whether the US market's had a really, really strong run over the last couple of years. We've experienced that purchasing real estate in LA that's doubled in the last couple of years. So I think it's really a matter of, it's a cyclical issue of where you think the real estate is, but we really think that the US dollar will certainly strengthen. I think, and going back to the Brexit, real estate's illiquid assets. So we only saw the real bottom of the market in the US sometime around mid-2011, even though the global financial crisis happened 3 years previously. So with the UK, we certainly have a sit and wait attitude, because I think the best deals are yet to come. In Australia, always seems to buck the trend. Residential prices in Sydney sort of have a 35-year trend upwards. The last couple of years were very, very strong. The Aussie dollar is currently sitting within a range we think is quite fair, somewhere between 65 and 85 cents US. We think that market is still pretty stable and continuing on. If we look at China's had a huge surge of real estate prices this year because of the clampdown on capital flowing out. Cities such as Shenzhen have gone up apparently 50%. These are kind of absurd numbers, something that's only really ever seems possible in China. Hard to predict where it's going to go, because unless there's an outlet for the capital and there's more capital curbs coming in from the government, you've got stocks or real estate. So it might continue to go. Or crowdfunding. It might continue to go. Hong Kong market is also very, very strange. It's the hottest market on the planet. They've tried to implement much higher stamp duties. I think went to 8.5% last month. So everything they've tried to do to cool the market there has not worked. The interesting thing about the market being one of the number one markets in the world, 2047, the whole of Hong Kong goes back to ownership and control of China. So that's not very far away, and it doesn't seem to be dampening everybody's investor mindset and appetite for Hong Kong real estate.
That's a long time in the real estate world.
It's a long time in the real estate world. It's a short time in the overall, relatively speaking. And then lastly to Singapore. Singapore has probably seen a consistent decline in real estate prices across the board for the last three and a half years. It looks like the government policy to clamp down on those prices is working, and it's going to stick. So there's a lot of good, at least rental deals in Singapore, but Singapore, like some of the other market investors, are going to have to look elsewhere. So that's a bit of a wrap up. Don't know if you had some thoughts on some of those key issues.
Well, I would say that when looking at China, I think when you're talking about the increases, those are limited to the tier 1 cities.
That's true. A lot of the tier 2 to 10 cities are falling off China's planet face, something like that. So where are you going to be putting your money?
Well, being that I have ties back to the US, I would still, and my own personal investment has doubled since 2012. So I would say I'd still look at the US market, looking at value-added projects. The core office projects seem to be a little bit flat at this point. And it really depends on the investment appetite. So if you're looking for higher returns, potentially look at, Asia and Australia.
Yeah, and as in all real estate, project specific, wrong side of the train tracks is a very, very different project and price point. Myself personally, due to the regulations in Australia tightening the bank lending, there's almost zero development financing available for real estate companies in Australia now from the banks. So they're now looking to the private market, which means there's a lot of senior debt available for private lenders. It's very short term, it's asset backed, it's double digit returns. On a global perspective, with the stability of Australia at the moment, I don't think there's a better place to be putting your money.
Go Australia.
Yeah.
And that wraps it up for us this week. If you're interested in real estate investment opportunities, please sign up at investorcrowd.com.
Thanks for watching.
Thanks.